So the first question I received was in regards to options. I'll just read it out loud. My question is on JCP, JCPenney. So let's pull up a chart really quickly so we see the stock we're talking about. I've hit really good on JCP twice in the last month. It has been downgraded before and the market reacts, but it seems to make good intraday moves, and it's starting to become one of my favorite safe stocks to play that I know. I wanted to know your opinion on this stock for options, and if you had any other recommendations as well for option plays that are a little less volatile. Well, in general, the more illiquid stocks and lower priced stocks are going to be less volatile, okay? And you might say, well, JCP is not illiquid at all. That's, I mean, granted, it did trade 4 million shares on Friday, you know, around 25 bucks. So it's trading about $100 million. But compared to the stocks, you know, I normally trade, Apple, which traded, you know, $18 billion or so, Google, which is typically trading $1 billion a day, Amazon trading $2 billion. JCP, you know, is less liquid, has less money flowing through it. And in general, when you have less money flowing through a stock, that means you have less people making decisions on it, and less decisions typically means less volatility, okay? So my first recommendation for something like that would be, if you found good success with a stock like JCP in this price range, in this price range and with this type of volume flow, look for other stocks that trade similar volume around a similar price range, because that's also, you might notice that they're similar to each other. Now, off the top of my head, DDD is one that comes to mind for me. That is another one that makes nice moves, has made nice moves over the last 150 days, and it trades relatively low volume, and it's at an interesting price point, a little more expensive than JCP, but it is another one. The other real tell on stocks that's going to tell you it's not as volatile is if they have weekly options. Okay, so JCP, well, that's interesting that it does have weekly options. I wouldn't have expected that. But you take a stock like Under Armour, which is another one I like, that I'd say is kind of similar to JCP and gives you a good, clear channels and supports while trading lower volume than we're used to, which results in typically lower volatility on an intraday basis. You can see that Under Armour just has the monthlies. And one of the other reasons I would say avoid the weekly options is because the weekly options are what? Typically more volatile, and they're typically trading on stocks that are more volatile. So if you're just trading the monthly, you're not going to be exposed to some of that volatility. So a couple things I would say here is look for stocks that you notice trade similar to JCP, okay, price range, volume, etc. Focus on the monthly options versus the weekly options. As for my opinion on the overall stock, you can see that it's in a pretty bad downtrend, but it did manage to put in a couple higher lows here, and it's working on a most recent uptrend that is starting to bounce off of again. So this 2450 level is really key, and it needs to get above this 27 level here to trigger some more upside. Next question. How do we know with these special promos when to get out? Because it seems they take such a fast nosedive, we can be left holding the bag. This is pretty simple, guys. Number one, you don't know. What you can know is what is your trading plan before you enter the stock? What is your target? Where are you going to sell at a loss? Where do you plan on selling for a profit? That's what eliminates this uncertainty that comes with when is the dump coming. Take a stock like TAGG, for example, which you can see on the 60-minute chart over the last 3 days, just made a monster move from 10 cents all the way up to 50 cents. But while it did hit 50 cents, it sold off and crashed all the way from 50 down to 25. And there's no telltale sign to know, but one of the things I always say is sell on the way up, okay? And one of the key ingredients to selling on the way up is by having a target to take profits at. For instance, if you bought TAGG at 25 cents, the 25-cent break, and you said, okay, I'm going to sell some at 30, sell some at 35, etc., you should be sticking to that plan, okay? Now, let's dig a little deeper, though, and talk about TAGG specifically. Notice on this 5-minute chart right here, you had your highest down volume in a 5-minute period over the last 2 days, would have been the last 2 days. That came between 10:45 and 10:50. You need to be able to identify moments like that. Because right here you have, for the first time since the run from 25 cents, there's a lot of supply starting to come out. And that's a warning sign. Just like to the upside, when you had this huge 5-minute volume come in at the open on Thursday the 25th, you had the highest 5-minute volume to the upside. That was a sign that there's great demand, and now we could get some more follow through. And then you got that again on Friday at the 5-minute open, okay? Those were positive signals. You have to look for negative signals. You can't only be caught looking for one signal, and that's the one that goes in your favor. You have to consider all sides of the trade. That's something we talked about a lot of times last week with Apple. If you're going to be bearish on a stock, that's fine, but you have to consider what those who are bullish on the stock are looking for, and vice versa. If you're going to be bullish on TAGG, or you were bullish on TAGG, that's all well and good, but you have to consider, if I was bearish on TAGG, what would I want to look for? Well, if you were bullish on TAGG up here, person A is bullish and person B is bearish. I guarantee you, when person B saw this supply starting to come out on the 5-minute chart, he started feeling pretty good about his bearish bias. So, one of the best ways to quote-unquote know when it's time to get out is, when would someone who is bearish on the stock or the promotion start liking what they see? Because when the person who's on the other side of the trade as you starts liking what they see, that's when things could really unravel. And again with TAGG, it's just common sense a little bit here. We started at 10 cents, we went to 50 cents. If you're not taking profits somewhere along those lines, then that tells me you have no plan. You have no plan. It's that simple. Always, always have a plan. It's okay to adjust that plan, but if you do adjust it, follow that one. And every time you're making an adjustment to a plan, you should always have certain quote-unquote get-out criteria. okay? And in general, I recommend this criteria be based on volume, be it supply volume picking up, as I showed on that 5-minute chart with the red bar, or maybe it's demand volume slowing down. Okay. Here's a question we always get once in a while. After watching a lot of penny stocks recently, one example, TAGG, I'm wondering what are some indicators that companies like this will actually turn out to be a solid stock company and not just pump and dump promos that eventually fizzle down to a couple of cents. We all know the answer to this one, don't we? Zero. I'm not going to spend much time on this. If you find me a company that has, you know, really good revenues, I'll tell you they're probably lying. If you find me a company that's getting promoted, I'll tell you somebody is selling shares and it's going to dump at some point. Very rarely is there a penny stock that is quote-unquote legit. But if you wanted to look for some of those indicators, I would say, number one, there is no promotion, I should say no paid promotion being done on the stock. A legit company can stand on its own legs, okay? That's first. Number two, just fundamentals. Does it have revenues? Does it have a small accumulated deficit? These are all things you find in the SEC filings. Okay. What is the employee-based compensation? What is the share? Is the share structure shareholder friendly? I'll just say two examples. ASNB and WEQL are two microcap stocks that I've noticed in their SEC filings that have shades of hope. You know, they have some revenues, they have some decent, they have favorable share structures and stuff like that. And they haven't done any paid promotion. Okay, but in general, guys, the chances are seriously zero. I put it at 99.999%. You won't see a penny stock move on to the NASDAQ. Okay. So this person just has a question on some option terminology and wanted me to go through an option purchase and explain what all the numbers mean on an option chain. First of all, I can only answer what I know. I got some questions today asking me to go over calendar spreads and if I thought straddles and strangles were a good strategy for earnings. And let me just tell you, I'm sorry, I can't answer those questions because I have no experience with them. And some of you have heard me in the past say I don't generally try to learn new things or improve weaknesses. I focus on what my strengths are and I focus on enhancing those even more. So as far as going over these terms here, covered, spreads, butterfly, condors, all that, I'm not the person who's going to be able to answer that. I just stick with the basic, okay? So just a couple of the things. Number one, let's use Apple here since that's my favorite one. So we know what options are. So let's walk through a purchase. Your contracts, that's going to be the amount of contract, the amount, if you want to put it in stock terms, the amount of shares that you're purchasing. Now what's important to note is that one contract is a multiplier of 100. So what that really means is you're always, say you want to buy one contract at $8.85 on a 605 strike call. How you calculate that is you take your one contract, you multiply it by 885, and then you multiply that times 100 because because one contract is a multiplier of 100 shares, okay? So that would mean that one contract costing $8.85 is going to result in a principal amount of $885. Okay? So you first need to determine how many contracts you're going to buy and understand what principal amount you're putting in, okay? Because as I just showed, just because you're buying one contract, it doesn't mean it only costs $8.85. It costs $885, okay? Then this buy to open, sell to close, sell to open, buy to close. Just ignore the open and the close and just focus on these two right here, okay? You would just click buy, okay? And that gets you in on the trade. You're in an 885 or whatever. And then when you go to sell your option, you're just going to click sell to close. And again, that just means you're selling it. Now, sell to open and buy to close, most of you probably won't be using these at first, because what this is just sell short and buy to cover if you put it in stock terms. So you could actually short the 605 call for $8.85, taking in a principal amount of $885, and then say this call went down to $5, you could then buy to cover or buy to close as the option term is, and now you'd only be spending $500 to close that short. But again, that's much more complex and extremely, extremely risky. So hopefully that is a fair enough explanation of the option purchase. And again, I'm sorry I can't go over some of these other terms, and the reason I can't is because I don't know them. And hopefully I'm an example that you don't need to know them to have a lot of success. And yes, you do need to have at least level 3 options approval to be able to short options. Okay, this next question is in regards to my Apple trading video, and if somebody could please post that in chat, post a link to that in chat from Friday, I'd appreciate that. Okay, so I noticed that in your live Apple trading video that you chased a move down on the 610 puts in the beginning. Those options went from $4 to $5, then to $6, but you decided to chase it anyways. And he's right, I did buy them at $6 after they had already moved 20%. Many people I know would use a chart that is showing price action with substantial increase in volume to chase a move like that, but I saw that you only used level 2. My question is, how do you know when to chase a move that has already resulted in a 20 to 50% gain on the option using just level 2, such that you're not prone to a violent reversal? And this question is, I like this question because it brings up a key point. And my answer is simple: preparation. Okay? Those of you who read my commentary on what I was looking for from Apple going into Friday, if it can click on it here. All right, whatever. Well, at any rate, what I said was I wanted to see Apple stay below 612.50, and if it did that, I was going to target a move towards 600. Okay? And also, what I said was I was paying very close attention to the volume pace within the first 15 minutes of the day. Okay? And I noted that if Apple trades 2.5 million shares in the first 15 minutes of the day, but it is as the price is falling, I will consider that a bearish sign. Okay? And if you look, Apple did trade 15 minutes, 2.5 million shares or more. It, in fact, traded 4.73 million shares within the first 15 minutes. And you can see on the 5-minute chart, the first thing the price did was go down. It opened at 609 and it was going down. Okay? So it was as the price was falling, so I considered that a bearish open. Now, that preparation allowed me to watch the level 2, see what was happening, and then move on to what my next step was as a trader. Well, I had said, number one, that my bias was bearish. Number two, I said what the volume criteria I was looking for to keep that bearish bias in line was. And number three, I had said what my target was. And that was 600 on holds below 612.50. Okay? So, yes, the move had happened. There was a 20% move. But given the way the chart was setting up on Apple intraday at the open, look at this. Look at this whole, yeah, it made a move above 612.50 at first, but it wasn't able to stay up there for more than a minute or so. Okay? So everything was in line with my criteria. Had I not prepared the way I prepared for the trading day, I don't know if I would have been able to just enter it. But this last part of the questions, how do you know when to chase a move that has already resulted in 20 to 50% gain on the option using just level 2 such that you're not prone to a violent reversal? I knew, this is the second part of my preparation, I knew what was going to get me out of the trade and shift my bias. Okay? You can see I said what would change my bias? Break an intraday hold above 612.50. In that case, my change of bias target was going to become $620. Well, as you can see, I never got that. There was never that change of bias trigger. Okay? So, therefore, while I'm watching that play out on the level 2, unless my stop loss, unless my change of bias triggers itself, then I'm not going to let the level 2 action scare me. Okay? And a lot of this is just from experience. I recommend watching, especially on Apple, you have to watch the level 2. You just have to stare at it. Even if you're not going to trade it, and you probably shouldn't at first, just watch it. Get a feel for how quickly it moves. One thing with Apple in particular that I'll tell people is the level 2 moves so quickly that when it's not moving quickly, you know there's about to be a big, decent type of move that comes. The other thing I watch for with Apple is how quickly does it fall below a certain price level. Okay, what do I mean by that? On Friday, when it went below 600, honestly, it took 30 seconds to go from 600 down to 597 or 591. Maybe we can see it on the 1-minute chart. Yeah, so here was when it finally went below 600, and that same minute it went down to 597. Okay, so how quickly that happened also was, again, that was after my initial trade, but that's the type of stuff I look for on Apple, where you could have then chased that move also and been expecting, 590s. And again, just going back to my preparation, my first target was 600, and then my second target was 585 to 590 on an intraday break and hold below 600. And, it hit 591, which is nice and close to that 590 target. But if you take that and compare it to the day before, okay, notice that when it was breaking lows on Thursday, notice that it wasn't necessarily dropping very hard, very fast. So you had this first low here at 614, okay? When you broke that, this is Thursday again that we're looking at. When you broke that 614, it made a quick, 75-cent move down to 613, 20-ish or so, okay? And then when you broke that low, it made another 75-cent move or so down to 612.50. Then you broke that, and it made another. That's when you finally got a decent $1.50 drop. But look at the big difference between how quickly that drop happened. And I observed that on the level 2 on Apple. Okay, and that's why on Thursday, if you were listening to me when I was on the microphone trading Apple on Thursday, I was saying I'm not expecting big violent moves because that hasn't been the trend. Apple hasn't, when it's been breaking these levels, it hasn't been doing it with a lot of violence, meaning it hasn't been breaking the key level and then sliding 2 to 3 points right away. No, instead it was more grinding, a grind downtrend versus a quick hard downtrend. And again, if you go back here, you had this 604 low, okay? Notice when you broke 604, Apple then made a nice hard move down to 601, pretty much within 2 or 3 minutes. So right off the bat, when it broke that first low, it kind of showed you its hand. It told you that when it's breaking lows, it's making $2 to $3 drops, okay? And then you had that again here at 597, from 600 down to 597. So then once it broke below 597, how long did it take to go down to 592? All of 2 to 3 minutes, okay? So like on tomorrow at the open, I'll be watching for that. Well, I'll just come to that later because at the end of this video, I'm going to go over how I prepare for a stock like Apple going into another trading day. So preparation and experience. And anyone can gain experience. Just watch Apple's level 2. If you can master Apple's level 2, you can master any level 2. Why do I say that? Exactly, because it's the most liquid stock on the market, other than the SPY, okay? But the SPY is an ETF. If you can master the stock that has the most amount of money flowing through it, you will be pretty good. And here's a kind of similar question. Watching your recent live trading video on Apple, I noticed you rarely looked at the charts when entering and exiting your trades. Is that something you think helps more when it comes to the big board stocks like Apple, or was that more instinct and experience for you when it comes to placing your trades? It's more preference for me. I believe that everybody's looking at charts for their type, to kind of get their insight. And the difference between charts and level 2 is charts are reflecting what the price of the stock has done, okay? Level 2 is reflecting what the price is doing. So to me, level 2 is simply more up to date, okay? It's more accurate. It tells you what's going on versus charts telling you what went on, okay? And I just kind of like seeing level 2 because sometimes you can see 30K blocks or 20K blocks on a stock like Apple where there's a lot of stuff going on, or there's a lot of volume. And sure, that'll show up in the chart, but if you see a big volume spike, take this volume spike on Apple, for instance, at 1146. If you were only looking at the chart, you have no idea kind of what type of volume that was. Maybe it was just 1 or 2 blocks, okay? And that's a little misleading. Or maybe it was a huge amount of small trades, okay? So that's why I like watching level 2, because I just believe it's more accurate. But again, that's just my preference. It's what I'm comfortable doing, so I wouldn't tell you guys to do one or the other. What I'll say is I use level 2 first and charts second. I use charts to kind of confirm what I feel like I'm seeing on the level 2. Okay? So going back to what I said a few minutes ago, on Thursday, again, I was observing how when Apple was breaking key lows on the level 2 as I was watching it, it was kind of a slow move down. And I was getting kind of frustrated because I'd be like, all right, it's going to break this low, and now I'm going to get that $2, $3 crack that I need. But that just wasn't happening on the level 2. I wasn't seeing that. Okay? So then I can go to the charts and I can say, okay, it's only dropping about 75 cents. And I can use it to confirm what the level 2 is already kind of telling me. But, you know, I just like level 2. I just think it's more accurate and it gives you a better picture, and it allows you to get to know the price of the stock better than a chart does. And at the end of the day, I think how well you know price is what distinguishes you from other traders. It's like your friends, okay? How well you know someone versus how well someone else knows someone is what allows you to have a better friendship or relationship with that person. I believe I know Apple better than 99.9% of the other traders out there. That's, you know, you can call that arrogant or whatever, but that's just my belief that I have. And I would say that belief comes from constantly watching the level 2. And lastly, don't ever trade with only level 1. Just don't ever do it, please. Due to the incoming hurricane and New York Stock Exchange using backup generators, would you recommend new investors not trade tomorrow? I would recommend new investors not ever trade. I mean, if you're new at something, you should be doing a lot of watching and a lot of paper trading, okay? Don't think that just because you've never traded with real money doesn't mean you're a new investor. If you paper trade for 6 months, you, to me, have a better chance of succeeding than somebody who's been trading with real money for 2 months. Okay? Now, with the hurricane and stuff, I have confidence in our markets, and, you know, I'm sure they're prepared for it. And I also have confidence that if they aren't prepared for it, that they'll just halt the different stocks and the different indexes. So the one thing I know I'd definitely be careful about on a day like tomorrow is be cautious of how long you're staying in a trade, because it'll suck to be in a trade on a stock that gets halted. Okay, here's the last question. And I'm not going to answer it directly, but what I'm going to do is show you guys how I prepare for a Monday, or any day for that matter. So this person has a question regarding getting an idea how to play Apple on a Monday. Right now, for example, I'm simply going off of momentum, and if I see a huge enough move, then I'll play accordingly. Is that what you pretty much do? And if not, what indicators do you use that suggest that a stock might not be continuing its previous week's trend? Well, again, what you should do is what you find makes you comfortable. Now, if what makes you comfortable doesn't bring you success, then you need to find something else that makes you comfortable, okay? Now, for me, with Apple, I always want to pay attention to the opening volume and what is the first thing the stock does? Okay. Opening volume criteria, like I showed, 2.5 million shares or whatnot. And what is the first thing the stock shows you the ability to do? Go higher, go lower, trade flat, okay? Because many times, the first thing the stock shows you the ability to do, you'll notice, is what it shows the ability to do throughout the entire rest of the day. Now, let's dive into Apple for a moment. And I'll just go over some key things. You guys can get some insight into how I look at things. The first thing, I have my notebook. I put Apple at the top of it. And in parentheses, I put where did it close? Where did it close on the previous day? $604. I make a note of that price. Okay? I also want to pay attention to similar outcomes. Okay, so what do I mean by that? Well, Apple is on a 2-day losing streak, right? So I want to make note of what has Apple done recently the last times it has been down 2 days in a row. What has it done that next day? I'm a short-term trader, so I'm going to look at that short-term trend. Well, the last time it was down 2 days in a row was the 17th and 18th, and it followed that next day with a third down day. The time before that it was down 2 days in a row was the 4th and the 5th, and it followed those 2 days with the third down day. Okay? So the most recent times that it's been down 2 days in a row, it has followed that next day with a third down day. So the first thing I'm going to write down as a note to Apple is the chart is telling me to expect a third down day tomorrow. Okay, so right away, now my bias is bearish. So that's the first thing you want to kind of establish. Be true to yourself. What is your bias? Okay, what's your mentality going into that day? All right. So, and the reason this is important to identify something like that, the fact that the last 2 times it's been down 2 days in a row, it's had a third down day. Why is that important? Because now, if Apple starts to show signs of being positive on the day, and as the day progresses, it looks like it's going to have a green close, okay, that would be my first sign that it isn't continuing the most recent weakness. Okay? So, secondly, I want to make note of just some simple key ranges. Number 1, where did it open? It opened at 609.45. So I'm going to make a little point and just say key price points. $609.45. That was Friday's open. Where did it close? 604. Friday's close. Where was the low of the day? 591. What was the high of the day? 614. And so those are the simple ones. Open, close, high, low. And now, again, because I'm a short-term trader, I want to focus on what did it do most recently, okay? So I'm going to look at what was Apple's afternoon high and what was Apple's afternoon low. All right? So let's take the last hour of trading, and you can see that the low, I'm going to make another note, afternoon or last hour range, 602.96 to 609.45. Also, make note that the high of the last hour, what's significant about that? What's significant about that 609.45 high? Anybody in chat? Yeah, it was the open. 609.45 was where Apple opened. So I find it a little interesting that that's also was the high for the last hour and it wasn't able to get above it. And now also, I'm going to just observe this 5-minute chart from Apple, okay? And I'm going to say, okay, it moved lower, sure, but did it finish closer to the high or closer to the low? While Apple was down on Friday, it finished closer to the high than it did to the low. Okay, so we'll see. That could be a potentially good sign. The nice thing about Apple here is 600 is key psychological support to me. Everybody's definitely watching 600. Okay. So now the other thing I'm going to make note of is where did the most volume trade? You can see in this 15-minute period, you had a ton of volume trade between 603, 603.70, so let's just call it, let's just move this up a little bit because there wasn't much down there. So 604.50 to 612, okay? So there was the most amount of volume on Apple in a 5-minute period traded between 604.50-ish and 612. And now what is important about this is my bias is bearish, right? What's going to possibly trigger a change in my bias? Okay? What's going to change my bias in terms of price? What might be the price level I want to see Apple get above in order to trigger a change in my bias? Right, 612 and above. That makes perfect sense. Does that not make sense to anyone? Why I'm saying that? If it doesn't make sense to you, ask a question in the chat now. Well, the reason I had chosen 612.50 exactly is, as I had pointed out, that 612.50 was the level I'm watching because from the May low at 519.95 to the all-time high at 705.07, 612.50 was the midpoint. Okay, it's 50%. So that's why I had chosen 612.50 in the first place. The reason I'm choosing 612-ish now is because that's the high from where the most amount of volume traded. That's where you had the most demand at the time and the most supply. So if it can break above 612, that's telling me that supply is losing the battle to demand. We have more demand than supply. Okay, yeah, that's exactly right, a pivot point of sorts. Okay, so if we can break above 612, that could change my bias. Now it can get tricky though, because we don't just need a break above 612, we need a break and hold above 612. Okay, notice when it broke above 612 around 9:40 on Friday, notice how quickly it came back down. It didn't spend any amount of time above it. So I'm going to watch for if it can get above as it approaches 612, if that's what it does, I'm going to use that as a shorting opportunity with a tight stop loss right around that level. And if it breaks 612, but it just prints up to 612.50, 613, I may stay in that short. What's going to cause me to really shift my bias is if I see a break above 612 and a real hard move up to 614 or 614.50, 615, just like we saw that real hard move from 600 down to 597 that I talked about earlier. Just like you were seeing it on the downside, now you want to see it on the upside. Okay. Now, the other thing I noticed is, what's the first thing it showed us the ability to do on the day? We talked about it, was go down, right? That was the first thing it showed us the ability to do. What's the last thing it showed us the ability to do on the day? What chart are you guys looking at? Last thing it showed me the ability to do on the day, well, yeah, I guess. It depends how you view it. Yeah, to me, I mean, the last thing it was showing you to do into the close was the ability to go down. But you guys are right. In the literal term, on this 5-minute, the previous 5-minute close at 6:05. No, yeah, so and then the last one was 6:04, so it showed you the ability to go down. Let's see on SPY if that was any similar. All right, and also I noticed that it broke this kind of afternoon low at 6:04.75. Oops. It kind of broke that low. So I have a couple key levels I'm going to watch. Within that 604.50 to 612 price range, okay, I want to watch this high at around 606. Can it get above 606? These are kind of micro levels. 612, 612.50, that's the macro level. That's kind of the broader picture view, okay? 606, that's the micro view. We're standing really close up to the picture, so we can only see a little portion of it, okay? 612, 612.50 is we're standing far away and we can see the whole frame, okay? So watch that 606, and then watch this 609, 610-ish range, right? Because that capped it in the afternoon. Okay. As for support, micro level, I want to watch 603. If it breaks 603, I'm looking for 600. Notice when Apple started going sideways, or excuse me, started going lower, it kind of lost this trend off the bottom. Okay. So let's talk about volume criteria. We talked about some price levels. Now let's talk about volume criteria. I want to make note of what has the average volume been on the last 10 days. Going into tomorrow, my average volume is going to be 21 million shares. So I'll put that 10-day average volume 21 million shares. And why is that important? Because I want to be able to pick on the pace of the volume, because the pace of the volume is going to tell me about supply and demand. Are we on pace for a greater than average demand day? Are we on pace for a greater than average supply day? Or is the price remaining neutral and we're not really moving that much? Okay. Another thing I want to consider in terms of this part of the question, what might suggest that a stock might not be continuing its previous week's trend? Let's look at our daily ranges on Apple. $5.91, $6.14, 20 some odd dollar range. $6.22, $6.05, $17, $6.10, $6.26, $16. You know, another $20 range, $25 range, $22 range, $12 range. Okay? Notice how tight this range was though, 8 points. Okay? And this range also was 10 points. Relatively tight ranges for Apple. What do tight ranges suggest on a stock like Apple, or any stock for that matter? Yes, supply and demand. What do they suggest about supply and demand? That they're relatively equal, they're in balance, okay? And anytime supply and demand are in balance, we have to make note. You have to make note because, like you guys said, that is the potential for a reversal. Because when supply and demand are in balance, that means now we just need kind of a slight uptick. So when supply and demand are in balance, we're at a 1-to-1 ratio. Now we just need supply to go to 1.1 or demand to go to 1.1, and that's going to tilt that ratio in favor of either supply or demand. So I want to see on a stock like Apple in terms of a potential change in trend. If you want to get bullish on Apple, one of the things you want to see is a tight range. Okay? Look back to this previous bottom here. Look how tight this range was and how high the volume was from 570 to 580 on the last earnings miss. All right. And the other thing that's going to signal a tight range on the day is, again, what is the first thing the stock shows you the ability to do? Does it trade tightly? Or does it trade in a really wide range? Well, Apple, 612 to 605, that's a $7 range within 5 minutes. That's a pretty wide range, I would consider. Okay? And again, that comes from being familiar with the stock. It's showing you right away the ability to trade in a wide range within 5 minutes, so that's kind of your cue that it's going to be a wide range type day. So that brings me to my next type of thing to look for that's going to help either reaffirm my bias or shift it. What type of range does Apple show me within the first 5 minutes of the day? I want to make note of that. When I see it tomorrow, I'll write it in my notebook. So what does Apple range look like at open? Look on SPY, guys. SPY, at the first 5 minutes of the day, had a tight range with this candle. Look how tight that candle was. The first thing it showed you the ability to do was trade in a tight range. Now, pull it back to the daily chart. It just so happened to be the tightest range, and it stayed tight all day. These last few days in SPY have been a generally tight range compared to some of these moves that we've been seeing. Take a stock like Google. Google had a tight range on the day. okay? I'm willing to bet that the first 5 minutes of the day, Google also showed a tight range. Look at that. First 5 minutes of the day, tight range on Google, $2 range. Let's take Amazon. Amazon, huge range on the day to the upside, right? First 5 minutes of the day, look how huge this range was, 227 to 233-ish. Or about a $5 range. Let's take Facebook. Decent sized range on the day for Facebook. Okay? Look how big the range was within the first 5 minutes of the day. It's very important to make note of. You don't necessarily, it's not going to play out every time, but you have to be aware. A lot of successful trading is about being aware of all sides of the trades and what other people are thinking about. Okay? So you have to watch those first 5 minutes closely. Back to Apple and our kind of volume criteria. So now let's look at a 15-minute chart. Yes, Friday's volume of 4.5 million, 4.7 million shares in the first 15 minutes. I'm not going to focus so much on that volume pace. Why? Because that was the day after earnings came out, and that's the highest volume it's traded all year, I think. Well, okay, since the highs from April and May. So just to me, it's unfair to expect Apple to trade at a similar volume pace tomorrow. So instead of focusing on that 15-minute volume pace that I saw from Friday, I'm going to kind of look at these 15-minute volume paces from before Friday. You had 2.5 million shares, 1.6 million, 1.8 million, 2.5 million, 2.6 million. So again, I'm looking for Apple to trade greater than 2.5 million shares within the first 15 minutes. Okay? And that's the volume and price action. Does it trade that volume and hold on to gains? Does it hold on to losses? Those are the two questions I have. Or is it flat? Okay, is it kind of indecisive? If that's the volume pace as the price is falling, I'm going to expect a break below 600. Okay? Now, this is why preparing is so nice, because once you prepare once, it often means you don't have to prepare a second time as extensively. So I just said if the volume pace of 2.5 million shares as the price is falling plays out and it breaks 600, my target is going to be the same one it was, 585 to 590. Okay? Any moves lower below 600 on Apple that fall short of coming down to my 590 target or below the 591 low, what do I have to make note of? What would that be? Exactly. It would be a higher low. Now, science says it'd be bullish. I don't know if it'd be bullish necessarily, but what I know is it'd be a higher low. Okay? And it would be my first sign, it would be my first signal, like sign says, that it could potentially be bullish. Okay? So you'd have to make note of it. It'd kind of be like a flag going up and say, okay, okay, something might be going on here. Okay? Now, so that's the one side. That's the one side of the trade. Now, if Apple does that volume pattern, as the price is increasing, okay, but it falls short of taking out that 612 level I talked about, or that 606 level, or the 609 level, what are all of those? What would all of those result in? Any of those scenarios? It would be a lower high, and you know, I would stay with my trade. Now, if after the first 15 minutes, Apple just kind of bounces around, stays above 600, but stays below 606, 609-ish, okay, what am I going to do? Right, I'm just going to watch. Just going to watch, and I'm just going to wait. And Philly raises a good point. What if Apple doesn't get the 2.5 million in volume? Why does volume mean so much? Shouldn't we be watching the price more than anything? Well, the volume is so important to me because the recent pace of supply and demand is really what I'm paying attention to. So if you don't get that volume, that tells me you don't have the same pace of supply and demand that you've had. Okay? So, and this, I was going to get to this, but say you don't get that volume and the price still goes below 600 on less than 2.5 million shares within the first 15 minutes, then now I can say not only is there not a ton of supply as evidenced by the pace not being as great, but there's even lower demand because now it has lower volume, but it still can't even hold above 600. Okay? Vice versa. If I don't see that volume within the first 15 minutes, but it's able to break above this 606, 609, then what can I say? Now I can say it looks as if supply is exhausted. Supply is all out. Why? Because it's showing you the ability to move higher at a volume pace that is lower than the most recent trend, which then would be a potential sign, like we've talked about, that a new trend might be starting, and now we have to adjust. But I'm going to set up my trade parameters around what I've seen most recently. I'm under the impression as a trader, and I've grown comfortable with the perception that what is happening most recently is your best indicator of what's going to happen, you know, within the next few minutes or a couple hours. That way, if what's happened most recently doesn't do a good job of foreshadowing what happens next, now you can know that maybe we're getting something else. Maybe we're getting a new trend. That's why it's so important to be objective and make notes of all sides of the trades and have your own parameters based on these most recent trends, so that when what happens next doesn't jive with what happened most recently, you can say, okay, now we have to adjust to this next phase of what's happening most recently, and then that's what's going to shape our biases moving forward. And that's why, like I said, preparation is so important, because this 612 level that I talked about on Thursday, okay, was also nothing really changed. There wasn't any new developments, so I was able to still use that same level on Friday. Because I prepared properly on Thursday, it made my preparation for Friday that much easier. And because I prepared well on Friday, it's making my preparation for tomorrow that much easier. When is my preparation going to become really hard again? When Apple changes. When Apple does something that isn't in line with what it's been doing most recently. That's when I'm going to have to really take a long time to evaluate some of the longer term trends and maybe go out to the monthly charts or the weekly charts, okay? But I don't have to do that right now because Apple isn't showing me that I have to. So that's kind of what I'm looking for in terms of volume criteria. So a couple things to take away here. Previous day's range, making note especially of the afternoon range. Okay? Why the afternoon range? Because that was the most recent trading. Volume pace, because that will give me insight into supply and demand. Opening range, because that might give me some insight into what the daily range is going to look like. Or i.e. size of the range, okay? And the price points I talked about. 606, 609, 612 on the highs, 600 on the low. All right? Any other questions regarding what I've just covered in terms of Apple and my preparation? Volume should never be discarded. Well, I told you what I'm expecting. I'm expecting 2.5 million shares within the first 15 minutes, and if I don't get that, then, like I discussed, I'm just, and excuse me, if I don't get that and I don't get price breaks below my ranges, i.e. I don't see that move below 600 or above 606, 609-ish, then I'm just not going to trade Apple. And then, like I discussed, I'll just talk about it later. I'll just reevaluate and, come up with a new plan and a new strategy. And if the market's closed, then this will be my strategy for Tuesday. I take the overall market into consideration, but when I'm trading Apple, I pay most attention to what Apple's doing. First 15 minutes, 2.5 million. And some of you might say, well, don't we have to wait until 15 minutes goes by to know? No. I mean, if Apple trades 1 million shares within the first 5 minutes, then you can have a pretty good idea that it's going to meet that 2.5 million share volume pace. Or if Apple only trades a couple 100,000 shares within the first 5 minutes, then you can say that it's probably not going to meet that volume pace. Wasn't it obvious Apple would have a big down move because they missed earnings on Friday? I personally am of the belief that nothing is ever very obvious, and if you find yourself entering an obvious trade, you'll probably end up entering it with less money than you went in with. Yes, I will generally plot my key points with, trend lines on the charts. Okay, we just have 2 chart requests to go over. ATVI is the first one. ATVI, bad break below what looks to be a pretty important support level here. Okay, did a good job of hugging that $11 low, and this breakdown came on above average volume as well. Just not a nice chart. Just in a pretty good downtrend here. Okay, so definitely would have a lot of work to do. On the long-term picture, it needs to crack above this $12 level. You can see that $11.70 to $12 was an area of support, and then once it broke above it, it became an area of resistance, and ever since it's just been in a downtrend. The monthly chart on this, again, long-term, just looks really bad. And just really sideways also. Just kind of range bound. But notice that the ranges over the last few years look to be getting lower and lower. So just overall, I don't really like this chart. It's at 52-week lows. So let's look to the weekly for potential support somewhere. Got a lot of support right around 1020. So if it breaks that 1020-ish level, be very careful. $10 to 1020, if it breaks that, it's not going to be a good sign for the stock. And in terms of resistance, it needs to regain that 1140-ish level. In between 1020 and 1140, it's probably just going to bounce around and go sideways. And I feel good about saying that because the stock has shown you an ability to do a lot of sideways trading. So overall, just not a very attractive stock to trade, in my opinion. BIDU, you can see on a 3-year chart, it's been going sideways for a while. What's interesting here about BIDU is you can see that this is where it topped out and kind of went sideways here in 2010. And that's also where it's finding support now. There's a real strong support in the 100 to 110 range. And BIDU, also, make a note, has earnings tomorrow after hours. Now, let's look at the daily. So overall, the long term, BIDU is still up a ton off of its 2010 lows, and it's just been consolidating in reality the last 2 years. It hasn't been a good stock if you've been in it the last 2 years. You can see we've got a clear channel. It's been struggling with 115 to 120 since September. So it needs a break and hold above 120. Watch BIDU for a break and hold above 120. Notice that when it made this break above 120, what happened? What happened? What did we get from the price? What did the price do on BIDU? Yeah, exactly. It went tight, okay? And what did we just talk about with the tight range? A potential change in trend. And that's exactly what ended up happening with BIDU. Okay, so if it is going to break and hold above 120, I want to see it move above 120 and not go sideways. I want to see it rip from 120 to 135, bang, bang, bang. Okay, and as JR points out, I want to see high volume as well. I want to see volume continue to remain very high to signal that there's still a lot of demand even as the price is rising. So BIDU earnings tomorrow night, I'm not going to play it. I rarely play earnings overnight. I have a much more successful time just playing the stock the day after they come out. Let's see if BIDU's broken any long-term trends. So you can see it did lose this uptrend line. And, you know, just a lot lower volume on a monthly basis recently relative to 2010. That's a bad sign. Anytime you see a high-priced stock really losing a lot of its volume, then, you know, that's not very good in my opinion. So I wouldn't be surprised if BIDU kind of suffers a hard fall back to this $80 level. On the other hand, you really want to see a volume explosion on the monthly chart back above 120, 130 to signal a potential retest of the all-time high near 161. All right, guys, that's all for tonight. I hope everybody got something out of this.